This is your LMAX exchange technical update for Monday, January 9th, 2017. Euro dollar. So the euro saw a nice little bounce in recent trade out from those recent 14-year lows at 103.41, but overall the downtrend here remains firmly intact, and any rallies are seen very well capped ahead of that next lower top and resumption of declines back below 103.41 and towards the next key support at parity further down. At this point, it would take a break back above 108.75 to compromise the bearish structure. Sterling dollar. So cable rallies remain well capped, and this market remains within its well-defined downtrend and could be poised for a retest of the plus 30-year low from back in October 2016 at 118.40. At this point, it would take a rally back above 127.96, a medium-term base, to take the immediate pressure off the downside. Dollar yen. So dollar yen continues to trade higher, and the market is very well supported on dips with this structural shift seen over the past few months that puts the focus on the top side. Any dip should continue to be very well supported, ideally above some previous resistance at 111.45, ahead of that next major upside extension through the recent high at 118.67 and towards 120 further up. Euro Swiss. So Euro Swiss has been slow to move over the past several days, but overall the pressure has been to the downside, and the market is now focused on a retest of the 2016 base at 106.24. At this point, it would take a break back above 109 to take the immediate pressure off the downside. Aussie dollar. So Aussie has seen a nice little bounce over the past few sessions, but this market is looking for a lower top now as the broader pressure remains on the downside ahead of that next major downside extension back through key medium-term support at 71.45 further down. At this point, only back above 75.25 would compromise the bearish outlook. Dollar CAD. So despite this latest round of intense setbacks in dollar CAD over the past several days, the market overall remains within a well-defined uptrend and is now looking for a fresh higher low ahead of a bullish resumption back above that recent high that we saw at 35.99 towards 140 further up. At this point, only back below the recent low that we saw at 30.81 would compromise the constructive outlook. Kiwi dollar. So the New Zealand dollar continues to show signs of topping out off that 2016 high just shy of 75, and the market now looks to be putting in that next lower top ahead of a fresh downside extension below next meaningful medium-term support at 66.76. SPX 500. The S&P 500 continues to push to fresh record highs, another record high this past Friday, with the market trading up just above 2280, and the focus now is on a push towards next key psychological barriers at 2300. We would need to see a breakback below the low from the 30th of December around 2232 at a minimum to take the immediate pressure off the top side. Gold. So gold has put in a significant recovery over the past several days, and this suggests that the market could still be putting in a longer term base around the 1100 area in favor of a continued resumption of gains. At this point, a close above 1200 will help strengthen this outlook and put the focus back towards a potential retest of that 2016 peak at 1375 further up.